All right, Maddie, we are back with After Hours, and we have had a crazy past couple days. Bank of Japan hiking 0.25% last Wednesday, and with that aligning with the proxy wars, Israel, and you got Iran and ISIS-K, you got recession fears looming, you got employment rate hitting 4.3% last week. Everything is falling off the rails and everyone's in a panic. And in times like this, people hop out of crypto. They go hop into gold, they go hop into their safe haven assets. But everything, Maddie, everything is looking crazy right now. What is your perspective on where we're at right now?
No safe place to hide, and that makes people get really upset, makes them start pointing fingers. I'm even seeing some really wild narratives that guys think that like one presidential candidate made this all happen out here, guys. Like, I just want you guys to think about everything that Gavin just opened with there. Like, all of these factors are factors, most of them well beyond the control of what any individual person could do, whatever political office they hold. This is, first of all, just also a very natural occurrence when you have a lot of over leveraging. So we talk about over leveraging the system. If you guys been in crypto, you guys remember the deleveraging or the unwind event during 2022, and that was the insolvency crisis. And it was, of course, different set of circumstances, but we didn't know that Solana was a big underlying asset that was being leveraged. We didn't know that there was, FTX being irresponsible and a bad actor with people's monies, and other people who also didn't know that over leveraging in that system as well. And that's kind of where we're at with the unwind from this carry trade with the yen. So basically, yen has always been a very, very cheap currency to borrow against. Sometimes we've even seen in the past negative interest rates. So what that means is basically the Bank of Japan will pay you to take out a loan in their currency to try to keep the yen afloat and all these different things. And people, of course, especially Americans or other traders, they take that and they take that difference, that cheap credit, and they go buy things here in America, or they go buy other investments, but it's leveraged up, right? And if you also on top of that are using additional leverage to open that trade at those discounted rates, then to go arbitrage that elsewhere. And if there is a hike like we saw here, so you have this cheap money that's not cheap anymore, right? This money is now very expensive to borrow against, and especially when they were only expecting, I think it was 10 bips, and they got 25. So it wasn't just the hike, it was the surprise of the hike being more than what they expected. So you get this whirlwind together, and you have other investments that are pinned up against it. It doesn't necessarily mean that there's direct weakness in the U.S. stock market. It means that there were other traders that were heavily arbitraging, and unfortunately, some of those stocks, some of those indices, some of those trades were using that cheap Japanese money. So I want you guys to understand that, like we said, this was a very big catalyst, but this was also already on the heels of a rough job report. Once again, the Fed being behind the curve on this, waiting until things get really bad to start doing something about it. And now us kind of just seeing the culmination of it here. So, a lot happened on the charts, a lot happened with the Japanese stock market, a lot happened with our stock market, everything happened crypto, gold, silver, not safe haven currencies, our own dollar down, right? Like, this was a full unwind, and it could get a little bit worse, right? I'm not telling you guys this is the bottom. It could get a little bit worse. The other thing that we have to consider is a lot of people are, calling for the Fed to cut rates, which they were already going to in September, right? Like, it's basically a 100% chance that they're going to be cutting in September. But now what people are calling for is cuts earlier than that. On an emergency meeting basis, let's go and get the cuts done earlier. Now, will this help long term with the availability of credit here in the U.S. and the overall sense of excitement in the housing market and the auto industry and all these different things? Yeah, of course. But short term, this actually can make things worse, because what can happen is if you have us cut interest rates, right, that's going to impact the relationship between the dollar and the yen even more, which might even exacerbate the unwinding. So end of the day, it's probably going to be like a band-aid situation if we do hike really, really aggressively, where it's like, all right, this is actually going to hurt worse short term, but the long-term benefits of us cutting rates here in the US is going to help our economy long. So I just want you guys to understand, though, that Fed cutting now, especially with the unwinding of these yen trades, will not necessarily have the immediate impact you might think it has, where it's like, okay, immediately up here, immediate turnaround, immediate rebound. So just some things to consider there, guys. I've done hours and hours and hours of reading this morning, but I think those are probably the most important points that you guys have to take when it comes to everything we're seeing in the market right now.
That's a good picture you painted there, Maddie. And team, you might feel on the outskirts right now and you don't know where to look to find this information. And I got a place for you. It's called Crypto Charge. CryptoCharge.com is where we are from. You can use code YouTube to sign up. And for 30 days, you can try it out. If you don't like it, you can leave us, or you can be a winner and continue with us and be a part of our community of winners. And I don't want to say it's all winning over here, but like, people like to do trades, Matt, and that could be very lucrative for some. But if you do not get the education, you will hurt yourself. I can imagine. Right. We were discussing, I was looking at our show notes from like a month ago, and I was looking at what the topics we were talking about. and everything felt like bullish momentum was taking place, right? It was everything. Everyone had their bullhorns on. Everyone was ready to go, new all times in Bitcoin. And then we see this past week, right? And so now we're at a moment where we have to take a step back. Oh, look at that voice crack right there. Take a step back and think about, what are we going to do with our money? How are we going to invest accordingly? And that's what we do at Crypto Charge. And we will give you a sneak peek of that today with what we talk about. But let's encapsulate this news piece of what Maddie just talked about, which, Maddie, you did a great job on that. Crypto futures record 1 billion in liquidations as Bitcoin nosedive, Ether slumps most since 2021. Crypto tracked futures saw over 1 billion in liquidations within 24 hours, driven by a market sell-off exacerbated by a strong Japanese yen. More than 275,000 individual traders were liquidated, predominantly long traders, with the largest single order on Huobi worth 27 million.
Oof.
The crypto fear and greed index hit its lowest levels since early July, indicating heightened fear. The sell-off was influenced by geopolitical tensions in the Middle East, poor earnings reports from tech firms, and a surge in the yen due to expectations of further rate cuts by the Bank of Japan. So, Maddie, this sets the stage for us. You gave a great intro there. We know where we are currently at with all these news events, but what we do know for a fact here is that there is amazing purchasing right now. Okay, so I want to take this moment, a lot that we just went over right now, and we must focus on the charts. We are very chart oriented here, and we were looking at the charts before the show. I'm like, oh, like, it's always funny after the fact of all these like narrative events, like some of the levels we hit with Bitcoin and some of these altcoins, where it's like, wow, very coincidental. Like, this was like meant to happen all along. So that is what we are going to focus on today, team. Maddie, take us to the charts. Can you start with Bitcoin and let us know where we're at there, the range we are currently in?
Yeah, sure. We'll definitely take a peek at Bitcoin. I actually just wanted to show you guys really quickly as well, though, just a quick glance at the indices out there, just so you guys can see the impact that we had on the stock market today. Now, of course, big nasty day for the Dow. We're down over 1,000 points as of time of recording here, which is a really nasty day for the Dow. We've had multiple down days here. The difference, what we've seen in the sell-offs, though, in the U.S. stock market. So, of course, yeah, we're down here, but we're back kind of like in the cumulative range that we were in for, whatever this was, 90 days, 100 days. You can see that also of the NASDAQ here, coming back and doing some back tests here after getting these big pushes up, coming back into these large levels. We had a lot of consolidation, and then same here of the S&P 500. Now, of course, trying to get a little bit of a gain back on there today. Now, when you look at some of the growth that you've had in the U.S. stock market, yeah, this correction is 100% influenced by all those factors that we talked about here. But there is certain pieces of price action, at least from the U.S. stock market perspective, that show rebalancing and not so much a complete reversal of the bullish trend. And then the last thing we'll look at here, this is really the biggest loser of the day. And I also evaluated these, and I put a screen of the four of them up in our Discord, just showing the losses across the major indices. Even the Russell 2000 didn't take it this hard on the nose. But of course, Japanese stock market here, being the Nikkei 225, had one of the biggest sell-offs. And you guys can see that actually started a few days ago, right? You started to see that cascade. You started to see just that barrage of bearish candles. Now we've tried to see a pretty decent recovery in here, but still down almost 6% on the day, when you have U.S. indices on their worst day down about 3%. So definitely the Japanese market's taking it on the nose. Again, what we did see here was a bounce off of a very big level. So you had actually a big W in here, big double bottom here in October of 23 that led to that big breakout here in the Japanese stock market. And then you finally get this little back test in here. Now, does that hold? I can't tell you, right? We're going to need to see what happens with policy moving forward here, but that's what we are seeing from a structural standpoint. Now let's move on to Bitcoin, though, and let's see what's going on with the Bitcoin chart. Now, what we've talked about here on the show, and especially as a team, with the range, and of course a range is a range, and ranges eventually get broken. They're going to get broken to the upside, or they get broken to the downside. And of course, we were rooting for a break to the upside, and we always want to go with the probabilities that are being presented in front of us, right? Looking left to right, which way is the trend going? The trend's going up. So we would assume after a series of corrections that trend continues until we don't see a series of higher highs and higher lows being established anymore, to which we say, okay, the trend is reversed. We're seeing lower lows and lower highs now. And I still don't think that we've broken a macro sense of series of higher highs and higher lows here on the Bitcoin chart specifically. Now, of course, we're going to see, a variety of altcoins, and just depends on their positioning prior to this last, Black Swan event. that we've seen here. And again, like we talked about, those geopolitical tensions over the weekend didn't help, because that was, like a little ramp up over the weekend. We already have low liquidity, and you have, Iran and Israel who can't keep their hands to themselves. It's going to impact the markets well before they open up on the, on Monday today. So we probably, if we'd seen the Dow Jones open over the weekend, we probably would have seen those same behaviors where the Dow would have been down, 180, 200 points over the weekend, and then seen an additional plunge on a Monday here. So with the crypto markets and with Bitcoin, we got that movement ahead of time. We already started to see that precursor come into play. Now you can see that we broke bottom of range there. That was right around 56K. 60K was kind of my line in the sand for that like heavy meaty range for that to hold. I was, if that fell, I was like, all right, then we could, there's a variety of possibilities that we can get down to in here. Now when we look at where we are, again, looking left to right here, you look at the 2021 peak, you look at that big depths of despair that we had in there, that big bear market, you get a breakout, you get multiple back tests in here, 1, 2, and then up and away you go. But when you start to look at some of the behavior basically from October of 23 forward, when we look at Bitcoin here, the corrections were very shallow, they were very short-lived, and offered very little rebalancing. In fact, I will point to one other area on the chart that if things were to get absolutely disgustingly horrible, which I don't think is the case, that $31,000 to $32,000 is structurally not satiated on the chart. Now we've given examples where you can go on and price never comes back to that area. Do I think that $1,200 gap on Bitcoin has to be filled? No, of course not. I think we're well past that. You'd have to have a global liquidity crisis that's 100-fold of what we're experiencing right now. But when we look at where we kind of went down to in here, we had a lot of topping in here. So from that 2021 structure, big top, this was actually the price that we hit here in 2022 before we saw the final legs of capitulation here on the Bitcoin chart, right? So this is an important level of the market. Of course, we could look as a mid zone here. So the bottom of that final correction here, other than that low liquidity here, will be right around $40,000. Okay, so those are going to be the two prices that I think, if you're going to examine a macro chart and say, okay, how much worse could it get from here from a structural standpoint, from an imbalance standpoint, if prices want to go down there and get hunted out, it's going to be 40K and it's going to be 32K. And those might sound like scary numbers to you guys. I think that a lot of people thought me calling for even the high 40s a few months ago. I said, hey, this is very unsatiated. I don't know what it's going to take for us to get there, but like this would be at least a reasonable pullback. We ended up getting there. I think also a lot of people got very comfortable with the shallow pullbacks, and even within our own community, some members have decided that our program's not for them anymore. Were telling me that I was an idiot for calling for deeper pullbacks. And Matt, we've only had these kind of shallow pullbacks. This different cycle is different, bro. You just don't understand. It's so different. Here we are doing the same size corrections we've done each and every cycle in different catalysts and different reasons, right? Russia and Ukraine last time around mid-cycle that we had, really screwing things up for us. You had COVID. You always have these catalysts that will bring it apart, tear things apart. And a lot of people think they can pinpoint that thing. They go, I can tell you when it's going to happen. Matt, I can tell you when the bull market's going to end. How could you possibly do that when you can't tell me the 5 factors that just happen to happen day after day, back to back to back, that just created this huge deprecation in the markets? Now, taking a step back, I'm very bullish still. I very much am. Short term, very bearish. I think that there's a lot of a chop. I think there's a lot of ugliness that we're going to probably experience over the next several weeks here while the markets digest what's going on, as we start to see what the Federal Reserve's response is to this, as we start to see some of the aftermath, occur over this. This is Monday morning, right? Or Monday afternoon for a lot of people waking up, getting to this, traders panicking, right? I think the last thing that I'll say specifically about this, though, is a lot of people are looking and they go, oh man, maybe I should consider deleveraging, right? Like maybe I should take some chips off the table. I think that if you were going to take chips off the table, it was when we had the FOMC meeting and the markets were still rallying hard, right? Like we've already taken a big chunk off the top, especially with altcoins. So now you're putting yourself in a spot where you're almost kind of taking yourself out of the market in the middle, even if that's where we are actually at. And it's not an asymmetric de-risking at that point, right? Like your risk management still needs to imply like, what is the risk of, okay, we found the bottom and then the market goes back up and then I have to, rebuy my position, at a higher price. That's really something that I personally don't want to be involved with. I don't want to have to rebuy my portfolio at a higher price and think that I can time the markets. So again, that's why we kind of do an approach of DCA. That's why we don't go all in on stuff. That's why we're patient, and we're selective about what we DCA into. So Bitcoin right now, when you look left to right, like it really doesn't look that crazy to me. The reasons behind it, the catalyst, very scary. Of course, from a grander perspective, I care very much about, the safety of people around the world. I don't like war. Those things bother me. But, when we look at the structure of price, nothing has been disturbed on a macro level that puts me at a concern that we're re-entering a bear market.
Yeah, there should be really no concern here, but this is for the newcomers that are here that, wake up to a day like today and panic. And there should really be no panic. If you join consistently with us, Maddie pulls up the charts tremendously. And there have been days, not exactly like today, but very similar. Actually, I think we've had a worse day in crypto charge. I
Definitely.
can't pinpoint it exactly when it was, but it
Luna
was like,
crash.
yes, there it is.
For me anyway.
Yeah, Luna crash. Oh my gosh, that was never mind. That was a
Ugly
terrible
day.
time. That was a terrible time, and so the sentiment then was terrible. So, team, this is just one of those moments. I hate using that phrase, one of those moments, but that happens in the charts, that happens in the markets, that happens within the globe here. Maddie, something that we were talking about before the show that I feel like we always lean on the charts on times like this, right?
Sure.
And one of those things that I want to lean on right now is not talking about the altcoins we talk about a lot, but some coins that we're not, obviously talking about, like within our like HBAR, API3, Zcash, Casper, whatever. But some altcoins you were describing to me like, hey bro, there are some altcoins that have back tested some pretty crucial levels, not like the 23.6% Fibonacci, but like, as you'll get into here in a second, some cryptos that have had significant pullbacks that are at least offering some better opportunities right now. And so these would be like the biggest steals that you guys have been begging for. So Maddie, do you remember the first altcoin we discussed, the one you were talking about?
So one of the opportunities that it's still not going to necessarily be like the absolute most prime risk to reward ratio compared to some of the other opportunities out there. But one of my biggest mistakes, or not biggest mistakes, but biggest opportunities that let pass because it didn't say my rules was render. And I missed my entry by not very much, and that hurts. That hurts me very much deep down. However, as we start to see distribution structures come in, as you start to see significant pullbacks that are actually meaningful, that makes your risk to reward ratio, let's say upwards of, a 3 to 5x of maybe like a 7 or 8x, right? That's a little bit more of an exciting opportunity, especially if you want to diversify or add another vertical like render, which I think is a very strong project fundamentally. And again, I'm always keen on waiting for good prices on strong fundamental projects instead of just trying to chase and find out, it feels strong because I like the price, right? I need that combination of both. So there's a lot of assets also just that I keep on my watch list that I don't necessarily invest in, but my team's invested, and I just, a lot of these structures get burned into my brain. So I look here, first of all, at render. So let's look at the render chart here together here, team. And I'm actually going to pull out to a 3-day chart just so we can see these candles a little bit more clearly together. And it's been a very healthy uptrend in here. Now, there's been a couple areas where I could nitpick a little bit and say I wish there was a little bit more satiation in here. When we look at the breakout back test in here, this was pretty decent over in here. So you actually had a nice breakout and then a back test here on render, right? Little test there. You start to make another higher low in here. So higher low being established over here on top of this previous structure. And then you get another breakout. So the only area that I think that I would have liked to see maybe a little bit more satiated would have been this one in here. We came pretty close. So we came as 337, 295 would have been the dream number. But again, still pretty good example of higher highs and higher lows. Now there was this big last push up into here to this $14 region, which was the 1.618. So let me show you guys really quickly here. Boom, we're going to go swing high, swing low in here. You guys can see that 1.618 up there got nailed perfectly to perfection. Look at that little wick there, big drop back. Now, there was a lot of excitement up here, and when you get this kind of momentum, people can't keep their fingers off the buy button, right? Like they want to be a part of it. They're happy with going from 13 to 22, and they're like, boom, let's go. Like that, they just want that euphoria. They want the feeling. They want the instant win. And sometimes you're going to get it. More often than not, you're not going to get it, right? Now, when you see a big moving here, a big topping structure, especially from a big fib here, and then you see, what are we down 70% from that high? We were down as deep as 75% from the high. That is a discount worth considering. Now, I'm not saying it again. It is the absolute best risk to reward ratio. If I had it my way, we would be back here right around $3, and we got to retest to $3. If $3 is offered, I personally will enter render, a small position in render at $3 here, because I really, really love the project, and I do think that we could reach, even maybe potentially beyond this 4.236, just because we've had so much momentum in the cycle so far. So I do like this. I like that we've rebalanced it now. And again, one of the things I talk about on the show is like we talk about some of these prices, some of the rebalancing, some of the things I'd be looking for, but like in people's heads, especially when they see the bullish periods, they go, but Matt, how does that happen? Like, I can't imagine price moving down this much, right? Like, I can't imagine seeing a correction of that size. And it almost doesn't matter what the reason is, right? Almost like Deus Ex Machina, almost like a literary treat within our own macro world. Like, just take our reality out of it a little bit and just understand that market makers want to drag price around to resatiate these zones, create more orders, and basically make more money for themselves. That's the number one goal of what market makers do. They don't give a shit if you make any money. They just want as many orders to be placed as humanly possible. In order to do that, you got to whip prices back and forth between liquidity pockets. Other chart we're going to take a look at here, and again, not something that I am personally invested in. A little bit of an old boy here. It is not popping up on my list immediately. I may have deleted.
Wait, lower, Matt. Lower. I saw
Right,
you're going for chain link, right?
It?
Are you going for
Yeah,
chain
I'm
link?
going for chain link.
Link is at the bottom. Scroll down. No,
Oh, it's right here. Boom. All right. I was rearranging my chart. So, all right, let's get rid of everything on the screen here because I want you guys to have fresh eyes on this. So, again, I don't have emotions about this stuff because I don't even own these things, right? So like when I point to things on the chart, I'm just showing you guys from a technical analysis perspective what should happen, and right? This is all a series of probabilities. We never should deal in absolutes. The second someone tells you can deal with absolutes when they're talking about charting or trading, they're absolutely full of it, right? They want every last dime of yours to be theirs, and they don't care if you actually learn anything or not. Now, when you look at Chainlink in here, you actually in the early days had a really nice retest on Chainlink. So you had unfortunately a really ugly launch here, like we saw with a lot of coins, just unfortunate timing, launching after the bull market was mostly done here, at least on Binance, right? You get this pop, you get a breakout here, and then when you look at that breakout though, you guys can see that breakout and that backtest occurred perfectly on top of that previous all-time high here. That's as beautiful as it gets for a breakout backtest. Now, you look at this huge topping structure in here, you do a lot of consolidation. In fact, this floor here is built on top of these previous highs. Now, here was my biggest bone to pick with this breakout. And a lot of people told me, Matt, you just don't understand. You don't understand that we're going to go here. We're going to do this next. In the next 2 weeks, we're doing this. And I don't know how you guys think that, just because you see something else move a certain amount and you think that everything else is going to follow that pattern forever. You get this big breakdown, clean accumulation, probably one of the tighter accumulative ranges out of a lot of the alts that I've seen there. I saw a lot more, volatility, even just spiking just past that. Chainlink almost could have been one of those assets through the bear market where you could have just traded top to bottom of range and just had stop below the bottom, stop above the top. Probably could have traded it that way. But I digress. We're not talking about that. An extended accumulation range, clean, clear breakout here in October, like we saw with the rest of the market. You get a big breakup into the 236382, which is again what we talked about on the show, hunting down those gaps that have not been filled yet because there is a magnet to fill them out. You get a head and shoulder, a distributive structure that forms in here, right? You guys can see that distributive structure that forms. You get the breakdown, and look where we landed. Right on top of the area that we should have backtested anyway. So again, can I promise you that we're not going to see other macro factors that can take us lower, can create more volatility in the markets? 100%. I think the bigger ideology behind some of the examples that I gave you guys here today is that a lot of times you will feel like you need to get into the market to join the uptrend because that's the last little leg up you're going to get, instead of identifying the areas, picking the opportunities that you think are best to you. And let's say you're identifying 15 or 20 opportunities. Doesn't mean you need to take all of them, but if 2 or 3 of them out of your list that you're waiting for patiently, you have your levels marked up, jump on those 2 or 3, and you don't even have to second guess it, right? Because you already know you like the product fundamentally. You already know, because you have that level marked up on your chart, that it's an area of interest and an area that you think is a good value buy. All you have to do is buy the asset, right? So it really makes it very easy when you take this approach. And what it also requires is a lot of patience. And that's really the biggest fall down of most people when they get investing, is they don't have the ability to be patient. They look at the structure, they go, it's not going to happen. They see a few up candles off of that, and they think, oh, can never come back to the zone. Price will always be the correct answer, right? Like, it's always going to know. You're never going to be 100% correct. But I would rather bet on the high probability setups than chase price. And I hope that that's what you take away from this.
So team, those are 2 cryptos, Render and Link, that if you have a position might be worth considering. And if we're being honest here, we don't hold any Render or Link right now. You heard what Maddie's thoughts on Render was there. We ran out of time. I wanted to talk about some of the things that, we currently hold right now and what we could add to those bags, but we'll just have to, Crypto Charge live show is where you're going to have to get it. You're not going to get it on this show today, but those are 2 opportunities that you guys could look at, because you guys have been harping about Render more than Link, but harping about Render just based off really price action, and so now that it's at a discount, what kind of buyer are you going to be, right? Are you going to be the one that buys at a discount, or are you going to wait for the hype to ensue and then you're going to get in, right? Doesn't make a whole lot of sense when you think about it like that. Team, that is all we have for today. Matthew carried today, so make sure you leave a like for him down below. We will see you guys this Wednesday, 2:30 p.m. Pacific, for the Ask Maddie show. So make sure if you have any questions, leave them in the comment section down below, and they will be answered if they are good. Don't ask no sleazy, ask no normie questions. Ask a deep question. We've gotten some deep questions over the last couple of shows, so keep them coming, guys, and we will see you guys Wednesday. Bye.